Well, first of all, if we're talking about, the NASDAQ, right, or even the S&P 500, there's no way to know. I mean, I can't tell whether this is the next bear market or a correction. But if it wasn't for the Fed, it would be a lot easier because the market would just collapse and it would be pretty obvious. In fact, if it wasn't for the Fed, it already would have happened. So the Fed is in there distorting the markets. And so the question is, will the Fed be able to prevent this correction from becoming a bear market? And will they be able to push the market back up to new highs? But that's all the market has going for it. There's no fundamentals. The companies are already way overvalued. It's just the monetary policy. But this monetary policy isn't costless to us. It's not like there's no negatives of diverting all these resources away from the real economy to prop up a bubble in the financial market. I mean, it's actually ironic because a lot of people look at Wall Street and they see, when the Dow was making new highs and NASDAQ was over 12,000, and somehow this is indicative that, hey, we're going to get this V-shaped recovery. The stock market is telling us that the economy is stronger than we think. It was actually the reverse. It was the weakness in the real economy that was propping up the stock market. What's bad for Main Street is what's good for Wall Street. What was driving the rally was the economy was so bad that it was causing the Fed to print even more money to offset it. And since the only really game the Fed has is the wealth effect, the only place its monetary policy is effective is in inflating asset bubbles, not generating real economic growth. That's what it's concentrating on. So it's putting all of its firepower into maintaining the phony wealth of inflated asset prices, pretending that this policy is meant to stimulate the economy. But the only way they're trying to stimulate the economy is through this phony wealth effect. They hope that if people feel wealthier because their stock prices are higher, that they'll go out and borrow and spend more money. But of course, convincing people who are already over leveraged and broke to go deeper into debt to buy more stuff that they can't afford, that is not a recipe for economic success, right? It's a recipe for disaster.
Yeah, 100%. Now, I want to dive into that disaster a little bit. I've heard you talk about the three main bubbles in the US, being the equities market, the bond market, and the US dollar, right? Do any of those strike you as the most dangerous, where people are most exposed right now?
Well, obviously, Americans are the most exposed to the dollar bubble, not the stock market bubble, because not all Americans own stocks, but all Americans own dollars. I mean, some dollars.
Yeah.
And if they don't own them, they're getting paid dollars, in their job. So the dollar and the value, the purchasing power of the dollar is very important to all Americans. And of course, investors, right, they're looking at their stock portfolios and, hey, how many dollars is my portfolio worth, right? So everything is referenced back to the dollar. And if the dollar collapses in value, then what difference does it make, right? How many you have or how high your stock portfolio is, on your statement. If you can't buy very much with the dollars when you sell the stocks, or you try to take your dividends and go buy things. So that's a bigger concern. The bond market also is tied in with the dollar bubble. They're actually the same bubble because bonds are really just dollars. They're IOUs for dollars for future delivery. Mm-hmm. And in the interim, you get an interest rate. So you get some more dollars while you're waiting for the bond to mature. And then you get, your principal dollar payment back. So they're all tied up together. And of course, when the bond bubble pops, that also is going to impact more Americans than the stock market because of the impact it has on the debt markets. Because so many Americans are living on credit, whether it's a car loan, an auto loan, a student loan, credit card debt, mortgages, whatever they got. I mean, most Americans, need to borrow money to survive. That's how they're making ends meet. And so this is much bigger than the wealth effect from the stock market. But it's all going to take a toll on the economy as the air comes out of these bubbles. It's just that in order to keep the stock market bubble and the real estate bubble and the bond bubble propped up, the Fed sacrifices the dollar. So I think the dollar is going to be the first one to pop. and then the rest of them will come tumbling down, probably bonds even before stocks. But stocks could be going down, but I think bonds will pass stocks and go down more. I think your safe haven is going to be gold. Gold is the mirror image of the dollar, really. As the dollar goes down, the gold price will go up. So I think gold is also letting you know what's going on. And, it's the opposite. The gold market, or the gold stock market, we've just had a bit of a correction here from new highs. I mean, gold almost got up to 2,100. It got to like 22,080 or so. And now it's back down about 1,930. It's kind of hanging out back at the old 2011 high. That used to be resistance. Now it's kind of support, which is the way charts generally work. And we have now 10 years of support beneath this gold market. We're ready for a brand new bull market. We've had a correction in gold mining stocks, silver mining stocks. These stocks, in my opinion, are getting ready for an explosive move up. And people should just be, loaded up on these stocks now while they can.
Awesome. Okay, I want to dive into that, but first, I want to touch on the dollar one more time. I've really enjoyed watching your debates with Brent Johnson debating the dollar milkshake theory, and if you look at the VIX today, or the Dixie, sorry, it's going your way, right? Do you think there will be another rally before the dollar continues to sell off, or is this the final? Is it easy to? Can you call that?
Well,
what do you say?
We don't know. I mean, I just took a drink. I got some water here. If I had a milkshake in here, I would drink that. But yeah, I've been arguing with Brett Johnson about this at your Cambridge House event for a few years now. In fact, 2 years ago, we were there, and he was convinced that the dollar was going to go up and the Fed was going to hike rates. And I said, no, the Fed's probably going to cut rates. And so we bet a gold coin. And I won that bet, and he gave me a gold coin at the event I did early this year in January. And then we made another bet. After I got paid off on the first bet, he wanted a chance to get even. I'm a sport, so I let him go double or nothing. And so we bet on the dollar this time, on the direction of the dollar index. Yeah. And at the time, it was at 96 and change. I mean, I forget exactly which. I wrote it down on my cell phone so we'd have it, right? So it was 96 something. And the bet was, he bet the dollar index would be higher when we came to Vancouver next year, which we may be doing that virtual now. Hopefully that doesn't disqualify my winnings. But so the bet was, a year from that date, or the next conference, would the dollar index be higher or lower? And of course, he took the over, I took the under. And right now we're around 92 and change. So I got a pretty big lead. The dollar is down quite a bit. So it would take a pretty big rally for me to have to give back that gold coin. I think I'm probably going to get a second one to add to my collection. But look, is it possible? See, Brett Johnson's theory is that before the dollar crashes, it's going to have a final rally. Kind of like, a drowning man coming up for air before he, goes under for good. And is it possible that he's right? Yeah. I mean, anything's possible. I'm not going to say it's impossible he's right. But since we both agree that even if Brent Johnson is right and the dollar does have that rally, it's going to collapse. So it's still going to drown, even if it comes up for another breath. And so I don't want to bet on that rally. If we both agree in the final analysis, the dollar is toast, then let's just invest for that outcome, because that way it doesn't matter whether he's right or I'm right. Because we both agree where the dollar is going long run. We just disagree where it's going short run. Well, I don't care about the short run. I'm not, trading options. And I don't want to take the chance that the dollar doesn't rally. See, here's the problem for the guys that are following Brett Johnson. And there's other people like Harry Dent. I talked to him. He's like, oh, yeah, eventually the dollar's going to crash. But before it does, it's going to go way up. Okay, what if it doesn't? What if you don't get the big dollar rally? What if the big dollar rally already happened and you just didn't realize that was it? And then the dollar just crashes and you're still waiting for the rally. You're broke. You've lost everything. You're holding on to, confetti, right? But let's say those guys are right and you just follow my advice and you get out of the dollar now, right? And then the dollar rallies. Well, so what? Who cares? You know, you've got gold, you've got foreign assets or whatever. The dollar goes up temporarily. Big deal. Then it crashes and you're fine because you don't have any dollars. So if you follow my advice and Brent Johnson is right, you're still okay. You know, would it be, would you be better off if you timed it perfectly and got this big dollar rally and then dumped dollars at the hike? Yeah, maybe, sure, you could be better off. But what if that doesn't happen? See, if I'm right and Brent Johnson is wrong, you're broke. I don't like those odds, or I don't like those scenarios.
Right.
Because if we're both right and you follow my advice, there's no way you go broke. But if I'm right, I mean, rather if we're both right on the long run, but Brett Johnson is right in the short run, you don't go broke.
Right.
But if you follow my advice, but if I'm right and you follow Brett Johnson's advice and I'm right, then you do go broke.
Right.
So to me, it's obvious what people should do.
Sure. Yeah. It's the low volatility play, right? You guys do agree on the end game, right? Yourself.
Yeah. So just position yourself for the end game.
Yeah.
We just disagree on how we're going to get to the end. But we all agree where we're going. So if we know where we're going to be, if our portfolio is positioned to win in the end, then we're going to win. If you're trying to finesse this and trying to bet that you know exactly how the journey is going to play out, and then you bet wrong, you're going to lose. Even though you know what the end game is, you're going to be just as broke as the people who don't. But meanwhile, I think what we're about to see, and I know Brett Johnson too, he still thinks that that gold is going to go up in terms of other currencies, even if it goes down in terms of the dollar.
Right.
And he thinks gold might even go up in dollars, even as the dollar, loses less value than the euro and the yen.
Yeah.
So I think that one way to follow both of our advice is just to buy gold, because we pretty much both agree on gold. We just disagree on the relative values of the various fiat currencies.
Right.
But I think that we're about to see the most spectacular gold rally that we've had since the 1970s. Right? And I think the profits that people will make who are invested in gold stocks now will be the type of profits that were made in the 1970s. Right? What happened from 2001 to 2011? Those were good years. People made 10 times their money. But I think they're going to make much more this time, because that rally was simply the end of the bear market, right? We had a big bear market in gold that went from 1980 to 2000, right? That from the peak of the big bull market in the 70s, we went and had a 20-year bear market. And then we kind of came roaring back out of that bear market. Gold went from under 300 to 1,000, pulled back, then went up to 1,900, right? Then we pulled back almost 1,000. We went through this 10-year, bottom base building. But now we're ready for the type of bull market that we got in the 70s. What happened in the 70s? That's when gold went from $35 an ounce to 800, 850, right? Gold stocks didn't just 10x. They were 50x. I mean, people just cleaned up. If you recognize the event of the 70s, and this is the event that was there, and there were people that recognized it. My father was one of them that was out there doing it. But the U.S. went off the gold standard in 1971, right? And so the dollar used to be backed by something, and then it was backed by nothing. And when the dollar was backed by gold, there was a limit to how many dollars we could create. There was some discipline, fiscal monetary discipline in Washington. Well, when we reneged on that commitment, it was a game changer for the way we operate. It opened up the doors to massive money printing and deficit spending and inflation. And as a result of this change in the nature of the dollar lost a lot of value relative to other fiat currencies, like the Japanese yen, the Deutschmark, the Swiss franc. The dollar lost about 2/3 of its value once we went off the gold standard against other fiat currencies. But all fiat currencies went down against gold, and the dollar went down the most. But gold went up, from 35 to 800. Oil went from $3 to $30. You had like a 10-fold increase in the price of oil. But it really wasn't oil getting more expensive. It was the dollar becoming less valuable. And so now when we wanted to go to OPEC and buy oil, we had to give them more dollars, because in 1970, when we were buying oil, we were giving OPEC gold for their oil. But then we said, well, we're not going to give you gold anymore. We're just giving you paper.
Right.
Well, then it became more expensive because
Right.
the quality of the money went down. So, but now we are on the verge, I believe, of the next major alteration in the global monetary system. What we had in the 1970s was the U.S. going off the dollar standard, or the U.S. going off the gold standard. That was the 70s. What's going to happen now is the world going off the dollar standard. So in 1971, the dollar was the reserve currency. It was backed by gold. And we reneged on that commitment. And we told the world, hey, the dollar is still going to be the reserve, but it's not backed by anything anymore. And the world, like, oh, shoot, marked the dollar down quite a bit based on that revelation that it wasn't what they thought. But they continued to use the dollar as a reserve in its new, marked down status. And that really enabled the floodgates to open on deficit spending and money printing and living beyond our means. And we were able to go through generations, decades of this phony consumer-based debt bubble economy, asset bubble economy. And this has created all sorts of economic imbalances that are affecting the entire world, to the negative. The world is having to live beneath its means to enable Americans to live beyond their means. And we've racked up all this debt that's unpayable. And now we're leading the world, into this, monetary hellhole that we're in. And so the next thing that happens is the world is going to say, no mas, right? We're off the dollar standard. We're going back to the gold standard. So we only accepted the dollar as the reserve because it was backed by gold. And we had gold, and so we said, oh, we'll just hold the dollar because it's as good as gold, and we can put our dollars in U.S. Treasuries, and we can get 5% interest or whatever it was back then. So but now the dollar is backed by nothing, and even if you put it in the U.S. Treasuries, the interest rate doesn't even keep you equal with the official inflation rate, let alone the real inflation rate. So there's no yield on Treasuries. I think the world is like, we're done. We're going back to gold. So gold is going to replace the dollar as the primary reserve asset for fiat currencies, the way it was before the dollar. It's not the pound or the yen or the euro. A lot of people, and this is one of the things Brett Johnson says, well, nothing can take the place of the dollar. None of these other fiat currencies are any better. And I would agree. Yeah, they're all problematic. They're not going to replace the dollar. But gold will. The dollar is what replaced gold. Gold is just going to reassert itself and take back the crown that the dollar temporarily stole. And gold is going to be the anchor at the center of the global monetary system. And that's where we're going to be. But to recognize that, you have to realize that that can't happen with $2,000 gold. Right. I'm not even sure if it can happen with $20,000 gold. I'm not sure where it's going to be. I mean, maybe it could be 15,000 or 20, 30,000. Who knows? But the price of gold has to go way up. Now, the other way to make it work is if the price of everything else goes way down and gold can stay the same. But there's no way we're going to get that. The central banks and the governments are not going to allow prices for real estate and stocks and everything to just collapse so that the relative price of gold goes up. It's so much easier to let the price of everything else stay where it is and have gold be the one that goes way up. And that's how you correct it. So I think that's what's going to happen. And so I think the people who see this, who are in these gold stocks, these things are literally going to be money mines. They're going to be making so much money when the gold price rises to where it needs to go for gold to be back as the reserve and the anchor of the monetary system. And now you're going to have all these central banks that are going to be buying gold, and that's big buying for the miners who are pulling it out of the ground. But then you're also going to have a lot of private individuals, private investors. They're going to be returning to gold in a much bigger way. You're going to see mainstream America reintroducing gold. Back in the 1970s, even back in the 1980s, right? It was very common for pension funds, endowments, they had allocations to gold mining stocks. That all went away. People have just thought there was no reason to do that. Well, I think that demand is all going to come back. And of course, all price has to go up to allow that to happen because there's just not enough gold to facilitate that. But if the price goes up, then there's enough. That's the beauty of gold. The market can always function. It just depends on at what gold price.
Right.
So
right.
the price could just go up. And the
Right.
thing about gold for a commodity as an industrial use is gold is so important and its properties are so rare and in some cases needed that even if the price of gold goes up 10 times or 20 times, it's still going to be in use in those areas. So, people are just going to have to pay more to get it.
Now, when you talk about going back to a gold standard, Peter, walk me through that a little bit. Are you talking about we're going to peg the US dollar to gold again, or do you just mean countries will begin trading oil for gold directly?
They could start pricing oil and gold. That would be a good way to do it. How many, they could do that. Countries can just have a lot of gold reserves, and they can use gold to, maintain the exchange rate. But yeah, I think it would be really good if countries went back to setting a fixed rate. This is how many ounces of gold or how many units of our currency are in an ounce of gold.
Okay.
And when everybody is fixing their currency to gold, it makes trading a lot easier because now for global trade, international payments, you have stability now in the foreign exchange market. You don't have to worry about, hey, I'm doing business with another country. Let's say I'm in America and somebody is in Germany, and I have to worry about the dollar versus the euro, and do I have to go out and hedge? But if everybody is fixed to gold, then you don't have to worry. I mean, it's all the relationship is known. And then what that does is that imposes discipline on politicians within those respective countries. They just can't promise voters something for nothing. You want something from government? Fine, you got to pay for it. Your taxes are going to have to go up. We just can't print the money because we have to maintain this relationship with gold. So it's great. The only losers from a gold standard are politicians of government because they give up a lot of their power, but the people get that power back. And the result is prosperity. What's bad for government is good for the governed. It's good for society. We're going to have more economic growth, higher living standards, instead of just blowing bubbles, right? Instead of seeing the rich getting richer based on financial engineering, the rich will get richer based on the value that they provide into the economy by way of producing goods and services. It's going to be production that's driving consumption, not debt. And the people who can produce the most will be the most rewarded in a free market system, not the way we reward people now through the government-based fiat system.
Okay, now help my viewers position themselves accordingly then. So, you've touched on gold equities, but, walk me through, Peter, an ideal portfolio for, say, the next 5-10 years. How should we be allocating cash?
Yeah, well, first of all, a lot of your cash should be allocated with me, right, at Euro Pacific Asset Management, if you're Canadian. And here's the good news, right? I have been talking about this for like 2 years now because we applied for a registration. Because of the rules in Canada, I was not able to accept accounts for Canadians at my U.S. companies.
Can now.
Now I can, finally. Yeah. So if you're living in Canada, and we started opening up accounts a few weeks ago, and we got a big backlog. We're getting a lot of Canadians that have been waiting. So if you're living up there in Canada, and we're licensed everywhere, so all the provinces are good to go, you can contact Euro Pacific Asset Management. EuroPacificFunds.com is the website, and you can set up an account for me to manage. My team out in Puerto Rico, that's where all the portfolio managers live with me. We have various different strategies to manage a global portfolio of foreign value stocks, dividend paying stocks, gold stocks. In fact, I got Adrian Day, who also moved down there to Puerto Rico. He's working with me at Euro Pacific Asset Management, and he is in charge personally of managing our global gold stock portfolios, which really give you a great combination of the senior producers, the royalty companies, and then the junior exploration stocks, the real, 50 baggers or 100 bagger potential. But again, there's more landmines than gold mines in there. And that's why Adrian adds so much value, because having been around 30, 40 years, he really knows this industry. He knows all the players, the projects, the management teams. He knows the scams to avoid, and he knows the real good ones that you want to put your money in. So we have a great portfolio that combines all these types of gold stocks to really give you a great exposure and get you in on these stocks. Warren Buffett, recently bought Barrick Gold, and we own Barrick Gold in our fund. We like Barrick Gold, and we know why Buffett bought it. And one of the reasons he bought it is because it's big, at least by gold stock standards, and he's got a lot of money. So that's one of the few stocks that has enough liquidity to absorb his buying. But a lot of the smaller stocks that are actually better values are off Buffett's radar. He's just too big a fish to swim in that pond, But we can, in fact, we have the pond, to ourselves in a lot of respects. So we can go in there and we can take positions. Because my gold fund is, at this point, we're getting close to 300 million in the fund. And then we manage several hundred million more directly in gold stocks in individual accounts. But still, that's a lot less than Warren Buffett. I mean, Warren Buffett, he's, what has he got? How much money? But it's, his Barrick position alone is worth half a billion.
That's right.
That one stock that he just started buying.
Yeah.
So we have a lot more maneuverability. Now, at some point, if I get enough money in my gold fund, we get up to, $5 billion, and, it will be harder for me too. But right now, we're still small enough that we can position ourselves in these stocks. So, set an account up. If you're listening to this and you're living in the US, then you want to contact Europe Pacific Capital. It's europac.com, right? And then you will set up an account for you there. But the Canadians can't go there because that company is not the one that's registered in Puerto Rico. It's the asset management company that got registered there. So that's where you got to go. But it's the same. I'm managing the accounts at both places. Okay. It doesn't matter. It's the same portfolio managers. If you're in the gold fund, it's still Adrian doing it. You're the other ones, it's my team doing it. We have an emerging market fund. I think the emerging markets are going to be the non-gold stocks that do the best in this dollar bear market. They're going to see a lot of their dollar debt just evaporate, right? It's going to be wiped out through inflation and, as their currencies go up. And this is going to be a giant relief for these emerging economies that have been, hurt by an overvalued dollar. That's been very problematic for their economies and for their balance sheets. All this is going to reverse. The country that's going to suffer is the U.S., right? We've been benefiting from this relationship. The rest of the world has sacrificed to support our artificially high standard of living based on this debt consumption. And so we're going to have to, deal with the reality of a situation where we're going to be consuming a lot less, and so our living standards are going to go down, and the value of our assets is going to fall in relation to the value of assets in these emerging economies, which are going to get much more valuable relative to U.S. assets. And the people in those countries that have been living beneath their means, that have been producing more than they consume and saving more than they borrow to enable Americans to do the opposite, now all of a sudden they're going to get to consume more of what they produce, and more of what they save will be invested locally in their own economies rather than being loaned to the U.S. government to be squandered on consumption. And so America's gain is going to be the rest of the world. America's loss, rather, is going to be the rest of the world's gain. And I want to be investing there. I want to hitch, my start of that wagon, because, that's where the profits are coming.
Any emerging markets in particular, Peter, stand out that you're most bullish on?
Well, look, a lot of them in Southeast Asia in particular, I think are going to be benefit quite a bit. But, maybe even some in South America, but more so in Eastern Europe, you'll see some. But these Asian economies, I think, they have some of the highest savings rates and some of the freest markets as far as less government interference.
Okay.
And, a lot of people are bearish on China. They think, China is going to get killed. Look, I think China is setting up for a big rally in their economy, in their currency, in their living standard. People think that, hey, they're going to lose this trade war with the United States. It's not the exact opposite, actually. And, we're actually helping China because we're kind of forcing China, we're backing them into a corner and maybe forcing them to do what they should have done on their own anyway. Few people really appreciate the real dynamics here. People think that we got them over a barrel because we buy so much of their stuff and we owe them so much money. But it's the other way around. We depend on China because they supply us with all this stuff and they loan us all this money. They can stop doing that, and then they win and we lose.
Okay. Now you touched on inflation a bunch of times there, and I heard you actually, or maybe you tweeted this. It was Alan Greenspan coming out and saying his biggest fear in the U.S. economy right now was high inflation under Powell's watch. And it struck me as odd because didn't this cycle begin under Greenspan's watch, or do you think it's just gone way farther than he expected?
Yeah, Greenspan has been out of Dodge for a while now, and he never wants to accept responsibility for the monster that he created, right? He's kind of like Frankenstein, and the Fed is his monster.
Yeah.
And it's already turned on everybody. But I don't know that Greenspan realized that it would get this far when he started. It's like I say, Greenspan wrote this playbook that everybody else is following. And every time we get a new chairman, they just add a few more plays, but it's the same theory of the game, which is just keep printing money, keep kicking the can down the road.
Right.
And of course, every time we add pages, it's, we have to print more, right? Because it's like the economy is addicted to this, debt drug. And the bigger the addiction, the more of the drug we need every time it starts to wear off. So he got this whole thing started. But Alan Greenspan is a smart guy as far as understanding the economy and money. By far, much smarter in this respect. I don't know about IQ or anything, but as far as economic understanding, the rest of the Fed chairmen that have come after him are clueless compared to Greenspan. But Greenspan, sacrificed his principles. And I think he did things that he knew were wrong because he was more concerned about being liked and being popular and just having everything go well than presiding over a crash, which, would have been better for the economy.
Right.
So I think Greenspan pretty much knows that we're screwed.
Right.
And if you actually hear him talking sometimes, he sounds like me as far as what you got to buy gold. The dollar's going down, inflation. We have these big deficits, unfunded liabilities. I mean, he understands the problem much better than Powell does, or Yellen did, or Bernanke did, any of these guys. So,
right.
I pointed out on Twitter, you got Greenspan, who was the Fed chairman, saying his biggest concern is inflation. And then you have Powell, who's the current Fed chairman, saying, yeah, my biggest concern is also inflation, but they're both concerned about the same thing for the opposite reasons. Greenspan says, I'm worried about inflation because it's too high. And Powell says, I'm worried about inflation because it's too low. Well, which Fed chairman is right? I think it's Greenspan that's right, which means we're all screwed. Because if the real problem is too much inflation, yet the Fed thinks the problem is too little, and they go and create more, right? I mean, what are they going to do? Obviously, they're making the problem that Greenspan is worried about much worse.
Now, did Powell's approach surprise you? Because when he was appointed Fed chair, he seemed very hawkish, and I think he even came out and said, it's not my job to support the market, right? Everything.
But as soon as he got the job, he found out that was his job. He didn't really understand the nature of the job until he assumed it. And he realized, oh my God, this is a gigantic bubble and I don't want it to collapse. And in fact, when he started to do the job that he thought he was hired to do, he started trying to normalize interest rates.
Yeah.
I mean, what did Donald Trump do to him? I mean, he was like, going to tar and feather the guy. I mean, they were ready to burn this guy in effigy. He was, he every day he was bashing. I got to fire Powell. Powell's a fool. He's killing us. Powell's our biggest enemy. Powell's a bigger enemy than China, right? All of a sudden, the Fed was the big boogeyman. China took a back seat, right? It was the Fed that we had to work. So pretty soon, it was like, that old movie, Cool Hand Luke, right? Where they take Paul Newman out and get his mind right. So it didn't take long for Donald Trump to get Jerome Powell's mind right. because now he's all about, QE and he's not even thinking about raising interest rates.
Right.
He's all about the stock market bubble. It's all, so he's completely done a 180, and he's exactly, where Yellen was. And the interesting thing is, when Donald Trump was a candidate, he was critical of Yellen because she was just trying to inflate a stock market bubble. Didn't care about the real economy, just tried to make it look good by keeping interest rates artificially low. And he said, I'm not going to reappoint Yellen because I don't want somebody like that. I want somebody who's like a sound money guy, right? Who's going to, and that's why supposedly he put Powell in there. And then as soon as he put him in there, he complained he wasn't like Yellen.
Yeah.
In fact, he wants rates negative. He wants Powell to be even easier than Yellen ever was or Bernanke ever was. I mean, he's demanding negative rates. Like 0 isn't even low enough for Trump. 0 is too high. We need to go negative.
Mm-hmm.
So this shows you that it's all insane, right? Who the gods destroy, they first make mad, right? And you can see that. I mean, the whole nation is crazy, and that means we're on the eve of our destruction here.
Yeah, well, it's wild to watch, and I think it's only going to get more chaotic as we lead up to the election. I got to ask, Peter, do you have any predictions for the U.S. election in November?
Yeah, I used to be more sure that Trump was going to lose. And this is even years ago, because I knew the economy would be in recession by the time the election rolled around. I didn't necessarily know it was going to be, COVID.
Right.
So I think COVID came around and made the recession worse.
Mm-hmm.
But it also gives Trump another excuse to blame it. Oh, it's not my fault. It's COVID.
Yeah.
Now, maybe the electorate will buy that, but you've got the Democrats saying, hey, Trump made COVID worse. He didn't react to it the right way, and that's why it's so bad. So I don't know, it kind of cuts both ways. But what really may be helping Trump is not the economy, but the law and order and the safety issue, because the Democrats now have gone so far over the top on, defunding the police and holding up, criminals as heroes and branding the entire society as racist. And so I think the Democrats may be turning off some of their base, right? They may be taking, or not even the base, maybe the middle. Maybe they've got their base. I mean, like the independents,
sure,
who probably would have been anti-Trump. And now they may be anti-Biden. Because I think really the election, I mean, you've got the guys that really like Trump, and then you got the guys that really hate Trump. So the guys that really like Trump are going to vote Trump. The guys that really hate Trump are going to vote Biden. There's not that many people that really like Biden. It's more like he's just the anti-Trump vote.
Right.
But I think that some of the anti-Trump vote might end up holding their nose and voting Trump because they're scared out of their mind about the crime and where the country is headed. Now that the Democratic Party is being led by this faction. So we'll see. I mean, I think that makes the election closer than I thought. So I think that opened up a window for Trump to win. But I still don't think so. I'm still, if I was going to say, what do you say? I'd still say he loses because I think the economy is weak. The market could be tanking by then. We'll see too. I mean, that's one of the other things he's got going for him is the stock market bubble. Trump is also trying to sell this false narrative that we had a great booming economy before COVID, that it was the greatest economy ever, when it wasn't. It was the Obama economy, just with more air in the bubble. Nothing changed. None of the dynamics. The trade deficits are the biggest they've ever been. We have trade deficits now that are bigger than any trade deficits we had under Obama. Of course, the budget deficits are bigger than the ones Obama had, but the budget deficits were exploding even before COVID. The Fed had already started cutting rates and went back to QE before COVID. It's just that once COVID hit, they went straight to zero without pass and go. And, then they went up to QE infinity. But I don't know that the public is going to buy how great everything was last year.
Yeah.
While things are rotten. So I think that, Trump won in 2016 because he was the outsider, the game changer who was going to drain the swamp. He's the guy that said, hey, the government is lying to you. Wall Street is lying to you. These statistics are phony. The unemployment rate is not this low. The economy is not this good. It's a bubble, and the Fed inflated it, right? And everything's going to crash, and we have no more industry, and we're a shadow of our former selves. And the reason that the economy is so bad is because all we've done is elect career politicians, and these guys are incompetent. They've screwed it up. So send me to Washington. I'm going to clean house, drain that swamp. I'm a businessman. I'm not a politician. And we're going to have a real economy. We're going to make America great again when you elect me. And people are like, yeah, let's take a shot. Let's see. What do we got to lose? Let's vote Trump. Well, now Trump's been president. Will be for almost 4 years. Nothing's changed. We're not great, even if he wants to pretend we're great, right? And now he's cheerleading the same stock market bubble that he criticized. He's advocating the very monetary policy that he criticized. Government is bigger than ever. Deficits are bigger than ever. And all Trump wants is more money printing. So, he didn't change anything. So there's no, now Biden is saying, well, I'm the change guy. I mean, how you change? He's been in government his whole life. What's he going to change? So, nobody can really claim that they represent change. But the history is, if you want something to change, you just vote for the party that's out of power. Right? I mean, that was Obama. Obama was hope and change, right? Vote for me because I'm going to change how lousy it was under Bush. Don't vote for McCain. McCain represents a continuation of Bush. So vote for me. And people voted for him, right? They hoped things would change, and they didn't. But, they'll probably hope again when they vote for Biden, because they'll say, well, we want things to be different, and Trump's the guy that's in, so we need the new guy to come in, and that'll be a Biden. But things are going to get much worse under Biden by far. Hopefully Biden gets blamed for all the bad things that happen on his watch. And we only have him for 4 years. We need to have a series of one-termers. But then the thing is, we just can't replace Biden with another rhino Republican. Trump likes to call out the rhinos. He's the king rhino. So we need a real small government, libertarian Republican, sound money that will actually drain the swamp, right? That will actually make America great again. Not just pretend that he made it great again, but actually put America in position to make herself great again. Because no government can make America great. What makes America great is the absence of government. So what we need is a politician or a president to demolish government, to get government out of the way, so that free market capitalism and individual effort, and that's what we need. Hard work to make America great again. But we got to get the government out of the way to enable all that to happen.
Okay, so when are you announcing your candidacy?
Yeah, well, problem is, I don't want to run for an office that I can't win. And it's certainly too late to do anything in 2020. But, I get emails probably every day from people that, want me to run for president and want to support my campaign. But, that's what happened when I ran for Senate in Connecticut in 2010. I got dragged into that and, wasted a lot of people's money and my own money losing that Senate bid. I didn't even make it out of the primary.
Okay.
But things could be different in 2024. Never say never. 2024, 2028. Obviously, we got some pretty old guys running for president now.
Crazy.
Look, if Biden wins, he's going to be the oldest one ever.
Yeah.
He's going to be pushing 80, right? 78. So I'm a spring chicken compared to Biden. I'm 57. So
yeah,
I got time. If the stars line up the right way, I just need to be in a position to really self-fund, which I will be in. If gold does what I think it will do, then I'll be able to self-fund my campaign.
Okay.
But I know I got a lot of donations when I ran for Senate, although I put in, quite a bit of my own money. But that was one of the things I hated about it, was the campaign finance rules. This thing was, that's really where the system is rigged, where they make it harder for non-career politicians to break into politics,
right,
is with this campaign finance. So it'd be better if we didn't have any of these laws. But if I was just like, look, I'm not taking donations, I'm just paying for it myself, then that makes it a lot easier.
Yeah, right. Of course. Okay. Well, I know our viewers are going to be watching for that for sure. I think easy to agree. We need less politicians in politics and more businessmen and women. Okay, Dill, I'd be remiss if I didn't ask you at least one question about Bitcoin. Forgive me now, Peter, but I got to go there because here's the thing. You're such an outspoken libertarian. This is a decentralized, borderless asset class. A lot of people would say this was made for you, right? And so why the bearish sentiment and why the disbelief?
Yeah, if there was ever a bubble built for me, this was it. Why,
Okay.
I really should have cashed out with $1 billion on this thing. but had I gotten into it, and of course, had I got into it, I would have felt compelled to pump it, right? But I can't pump and dump, right? I personally can't buy something and then tell people to buy it only because I want to get rid of it. I'm not going to sucker people into a pyramid scheme. I have to tell people to do what I believe in. And I could have said, hey, I'm in on this Bitcoin thing. I don't think it's going to work, but there's enough fools out there that might think it's going to work. So let's buy a bunch of it. And when the price goes up, we'll all sell at a higher price to all these fools. I mean, it's kind of hard for me to lead the troops into that kind of situation. But at the end of the day, do I like Bitcoin? No, it's got nothing to do. It's everything I don't like about fiat money. I don't like dollars and I don't like euros, not because they're made of paper. I don't like them any better if they're digital. And it's not because the government is the one that's printing them. If a private citizen printed up some fiat money, I wouldn't like it any better. I mean, it's just paper.
Yeah.
We need sound money. Sound money is based on a commodity, a real thing, right? A real tradable good that can have value relative to other tradable goods. So it can provide a frame of reference, a benchmark with which to price things. Gold is a real commodity and has real applications in the world. So it has a value, and you can express that value relative to all the other commodities that people buy and sell. And there's a long history of these relationships that you can tell, hey, is something cheap, is something expensive? And then what made gold so suited for money, in addition to its use as a commodity, was the properties that make a commodity better money than another commodity. Those are the properties that Bitcoin copied, but they missed out on the most important aspect, the elements that made gold so valuable as a commodity in the first place that enabled it to then become money. You can't just skip all those values and then magically be money. Right? This is all just a pyramid scheme. And Bitcoin is not used as money anywhere. It's just a trading vehicle. Nobody prices products and negotiates contracts in Bitcoin. There's no Bitcoin bond market or insurance policies that with Bitcoin death benefits. And you go on Amazon and you look at the prices. They're in dollars. This one isn't like how many Satoshis to buy this or how many Satoshis to buy that. So it's not money. It's just people are buying it, hoping that one day maybe it would be money, but it's never going to be money. There are people that say, well, it's digital gold. No, it's not. It's not. It's no more digital gold than if I have a digital house on my computer, in some fantasy world, right? And I'm going to say, oh, I have a digital house. Okay, but that's not the same as an actual house. It doesn't provide any real life shelter. I mean, you can have the nicest digital mansion you want to build, but what good is it? It's no different than a digital shack, So digital, it's not gold. So it's fool's gold. People are going to lose a lot of money. Unfortunately, you have a lot of people who are saying the same thing I'm saying, and they're saying, yes, the dollar is doomed. Fiat currency is going to be a crisis, inflation. So you got to get out of the dollar and you got to buy Bitcoin. No, you got to get out of the dollar and you got to buy gold, not Bitcoin. They're jumping out of the frying pan into the fire. I feel so badly that so many people are going to get burned by this con, which is really what it is. A lot of libertarians, a lot of people have fallen for it because, yeah, I get the appeal of, oh, yeah, we've come up with our own money. It's an alternative to this fiat system, and it's got all this. Yeah, but you know what? We already have that alternative. It already exists. It's gold. You don't have to reinvent the wheel. Gold works. This isn't going to. Now, people are saying, oh, Peter, well, this, you're just stuck in the Stone Age, or you're on a horse and buggy. Gold is a horse and buggy. Bitcoin is a horseless carriage. Bitcoin is a car. Don't you realize that we're moving away from horses, and you don't want to, you're just too old and set in your ways, right? You don't want to get in a car. You want to stay on your horse. That's not the analogy. Bitcoin is not going to put gold out of business. It is not an improvement.
So we'll wrap it up. It's been great having you on. And anybody who wants to hear more from you, you're the host of Schiff Radio at schiffradio.com. You run a YouTube channel. It's youtube.com/Peter Schiff.
Yeah, absolutely. Yeah, Peter Schiff. It's a Schiff Report on YouTube. Schiff Radio is my podcast. And I also put my podcasts up on YouTube. So go to my YouTube channel, subscribe, go to Schiff Radio. Also follow me on Twitter. We're talking about my Twitter. I'm Peter Schiff on Twitter. I'm on Facebook. I just joined Instagram about a month or two ago.
Hey.
So, but yeah, you can go, follow me on Instagram as well.
Okay. We'll pop all that stuff in the show notes so people know where to find you. And we're going to have you back on either close to or in January to revisit the conversation with Brent Johnson and the.
All right. Yeah. And hopefully by then I'll have my second gold coin.
Got it. Okay. Awesome, Peter. It's been great having you on.
Take care.